Hi everyone, and thank you very much to Kathleen and Heisbert for that interesting conversation. And a special thanks to Appian, who are sponsors of this event. We're now entering our final session for the day, probably the most exciting. It's our InsurTech InsurTech Showcase, which will be led today by Francesca Smith. Francesca is CEO and Managing Partner of Cambridge Consulting Associates, and we're going to get some great visuals and some slides to help guide us through the final session. So, Francesca, over to you.
Thank you, Helen, for your introduction. Yes, it's my pleasure to introduce 4 entrepreneurs to you today. Just to give you a little bit of background about the strength of the InsurTech market, Forrester, in their latest figures produced in Q1, Q2, saying the market's very hot. There's continued heavy investment in digital transformation, and a healthy chunk of funding is going to disruptive InsurTech startups. Particular highlights are that the Q1 was actually the strongest quarter on record ever, and that funding has more than quintupled year on year to $5 billion. Investors continue to bet on disruption, and just some proportional numbers. $3.9 billion went to enterprise commercial insurance, and that was followed by $236 million for health and travel insurance. So established firms in the insurance sector also are continuing to recognise the value of innovation with investment in startups, which sets a great trend for now introducing our 4 entrepreneurs. So first of all, I would like to introduce you to Roger Ferrandis from Weneley's. Roger.
Hello everyone, thank you Francesca for the introduction. I'm Roger, Chief Operating Officer and co-founder of Weneley's, and I'll be talking today about how to leverage open data in order to help automate underwriting processes. Thank you.
And can you just give us a little bit of a linkage between why this particular products and service that you've created from your own background, Roger?
Right. So I was working in the insurance industry as a innovator consultant, and when we started saying data is the new oil, I realized that the data insurers are handling in the commercial insurance industry doesn't have a really high quality of data. So we found that by leveraging and using open data, we could help them to solve this kind of problem.
That's great. Thanks so much for explaining that. And moving on to Paul Scott, who's Head of European Sales at Bdeo. Paul, would you like to introduce yourself and also explain that linkage, your motivation?
Yeah, great. Thanks. So I don't like wasting time filling out forms to get my car insurance. Yeah, and I don't like waiting a long time to get the feedback about my car insurance, get that back and know how much to pay. So these are one of the drivers why I joined Bdeo. Bdeo is an insurtech based in Madrid. And using Bdeo Visual Intelligence technology takes a customer 6 minutes to take photos of their car and get an instantaneous insurance policy issued, which he can sign on the spot. That's why I joined Bdeo, and this is what I'm going to talk about. I'm an English guy living in Germany, so the football is going to be interesting later on. Yep. Thank you, Francesca.
Thank you. And moving on to Andy Thomas, who is CEO of Kind. Andy, would you like to introduce yourself and your products?
Thank you, Francesca. Hi, I'm Andy. I'm the Chief Exec at Kind. We started Kind in March 2018, and what was driving us was that we realised that we were talking to a lot of clients who were talking about cyber risk and had no actual insight into the cyber risk profile of their own business or those businesses that they were trying to insure. So we started Kind with a singular purpose to help people see and understand and manage the cyber risks that they're presenting to the world, but to do that in this very simple and easy to understand way, which means that you need to hide the complexity and present simple and beautiful products. So hopefully I can show that to people this afternoon.
That's great. Thank you, Andy. And finally, James, last but not least, James, would you like to introduce yourself too, please?
Thanks, Francesca. Yeah, James Billam. My background is in the insurance claims industry, really the motor claims industry. I've done it since, to use Francesca's words actually, knee-high to a grasshopper. And since then, grown to an industry of insurance fraud, and thought there was a better way to combat fraud than to continue to analyse data at point of claim. And so set up what was Verisk Risk Solutions, is now Underwrite, to combat fraud at the point of quote and point of sale, specifically in the motor area, and bring down them fraud rates for insurance companies.
That's great. Thank you, James. And so we've got a very eclectic mix of from big data analytics platform, claims process streamlining, cyber risk and fraud that we're going to cover in terms of the presentations. And the first one we're going to hear from is from Roger Ferrandis and the big data analytics platform that he has. Roger.
Thank you, Francesca, for the introduction. 7.2 billion euros is what commercial insurers are spending additionally in small and medium enterprises losses. And this is happening because 2 out of 3 SMEs are insured based on wrong and outdated data. The reason why this is happening is because we are asking agents and business owners to fill out forms that are very extensive in a manual way. So the solution we have is the truth, and the truth is out there. All the information we need to solve this problem is available on internet. Winalize is a data analytics platform that, by using only the name and the address of a business, collects data from hundreds of data sources. What we do after collecting this data is, first, update the current data the insurer has. Second, enrich with risk data points the information. And third, we build risk indicators to help the insurance company sort their clients by risk levels. This information is then attached to the information of the business and is sent back to the insurer through a seamless connection with any type of connectivity status. And this whole process is done in only 2 seconds. To give you an example of what we are doing and how this applies to a customer, what we see is that an insurer takes almost 5 minutes or even more to underwrite a policy. In only 2 seconds, what we do with Winalize is, first, identify what is the wrong data, and after that, update it with new data. Then we add risk indicators to have a wider view of the risk of this customer, and we combine those risk indicators to help the insurer increase the claim prediction they have of their clients. By increasing this claim prediction and adding 100 scores more, we're helping insurers to improve in 3% their loss ratio levels. If you would like to know how this applies to your corporation, we will send you a use case after the event, but you can also book a free demo on our website. In sum, this old technology is helping us to achieve the following great results: 100% underwriting automation, name and address, and the business can be underwritten. 85% data quality increase. 85% of the portfolio has enriched data, and 300% loss ratio improvement. And because of these results, we are already working in the US, the European Union, Mexico, and Brazil with some of the most relevant insurers in the world, such as Mapfre, Zurich, and Hiscox. And these corporations have chosen to partner up with us because of our competitive advantages. We're one of the few data analytics providers in the commercial insurance space that has a completely flexible connectivity. Regardless of your IT capabilities, regardless of your budget in IT, whether you have API or don't have it, we have a solution for you. We also work with synthetic data. When data is not available, we predict it with a very high level of accuracy. And we are the only one who works with insurers from all tiers. It doesn't mind how big or small is your portfolio. It doesn't mind how big is your budget. We want to work with you, and we are flexible to reach an agreement and a partnership. This whole thing will not be possible if it wasn't because of our committed team. We're 12 people. We count with previous InsurTech co-founders. We have gathered more than 60 years experience in the insurance industry. And I can tell you 60 years is a lot of time. And we also have our technology developed 100% in-house, which means that we can be completely flexible to adapt to the insurer's IT requirements. But today I'm here to propose all commercial insurers that are saying my page the following. We can do a free demo in only 1 week. We can analyze a specific data set of businesses, whether they are customers or random businesses. What we will do is first update the data we find that needed to be updated and explain why this data was updated, and then enrich it with new risk-related data points. Because at the end, what we want to achieve is to help insurers get back those 7 billion euros they're spending additionally, while we're making sure that our favorite coffee shop and the bakery our best friend is running are properly insured. So if you want to have further information, you have my details on the screen. Please get in touch. Thank you very much.
So back again, everybody. So I was talking before about how I don't like to fill out manual forms and find long and time-consuming processes boring. So I'm going to tell you a small story about how visual intelligence is driving automation in the underwriting business, how we're helping put insurance carriers next to the customer, in contact with the customer, driving the automation and understanding better the risks and addressing the fraud. And I'm going to start off this journey by looking at in some countries a journey where vehicles have to be inspected before they get actually insured. In this case, a customer normally fills out his policy, very boring in paper. He then has to get the vehicle inspected, either taking it to a local assessment center or an inspection site, or maybe getting an assessor to come and visit the asset himself. Pictures are taken. Lots of fraud checks are made. All this data is consolidated somewhere at the insurance organization. A decision is made whether to insure or not, or whether I need to do some more reviews. And then I need to calculate a magical deductible, what's happened, and then I can actually issue my policy. And this is taking 4 to 6 days, which is, in the modern days, it's far too long. Yeah? And what are the challenges here that we're facing? We're facing bumpy customer journey because it's taking time. A lot of money is spent on the manual inspections, consolidating and reviews. And as we've heard on a lot of other events, legacy systems are preventing innovation, and the fundamental fraud and trust in customers is hindering a little bit giving the customer its own self-service. So this is what we face in the marketplace in the situation. And what's our solution? Our solution is 6 minutes. I mentioned before, 6 minutes end to end. What happens there? So a customer gets a link sent to via SMS or an email, and gets guided through capturing images of his vehicle and asset. Very easy to use. This is where visual intelligence comes in for the first time, because visual intelligence recognizes a car, recognizes a number plate, and then comes up with a guided mask to show how to take an optimal photograph or image of the vehicle. And this continues at the side because we recognize it's a wheel, and we then make a nice shape for a vehicle. So it's easy to capture these photographs. We even have a little check to make sure that the images should be bright enough so that we're capturing the right information. And this is all speed. So this is an average taking people 6 minutes to complete. And then as evidence capture process, we're doing some basic fundamental validation and fraud checks, the geolocation, although photos taken at the same location. We don't allow people to take images of a screen, which is a classical fraud case of trying to capture a nice brand new vehicle in a different location. And we do some plate-to-plate validation, etc. So a lot of these fraud checks are built in. One of the key things in determining the deductible is to understand how much damage is on the vehicle. And then the visual intelligence kicks in for the next time. And really, identifying any damage that exists and calculating what it costs to repair. Using our deductible calculator, then we then come up with the relevant deductible for the person. And this is all about all these three different steps: the self-service, the fraud checks, the deductible calculation, helping to automate the claims, the underwriting policies. If we look at some of our track record of our customers, they say 40% of all such cases have no damage on the vehicle. So we can process these automated process and issue the policy. Another 40%, or a little bit more than 40%, have some small damages on the vehicle. So we can also calculate automatically deductible, and this process also runs through very smoothly without having to involve any of the local underwriters in the office. So this is all about automating the process and going from the 4 to 6 days back to 6 minutes. Now you might say this use case is not so much interesting for me in my country because we don't need to validate the vehicles or have inspections beforehand. But then I asked the challenging question, what do you do about fleets? Because everybody takes on a fleet of 50 or 100 cars, and you've got really no idea about the status of these assets are. So how about doing a post-policy audit, or maybe doing a similar type of exercise after 12 months or just before the 12 months over, before the policy renewal? So it's all about using the digital technology to capture evidence about the assets, whether it's for a customer or it's for a fleet. Another key areas, sometimes the fleet location is very key. So where is the fleet of cars kept overnight? And wouldn't it be nice just to, instead of having to send somebody out, just to connect somebody with a smart video and have the video premise recorded, also having the geolocation so everything is recorded on the files. And last but not least, a very new development is recognizing, using visual intelligence, the odometer, and being able to convert that using the OCR technology, which is really going to help and drive some of the pay-per-use policies that might kick in the future. So it's all about benefits. So what does it give the customer? Great digital experience, immediate response. Track records say that more than 90% of people who are asked to complete the process actually complete the process, very high. Has a huge impact on NPS. So we build in NPS questions in the journey. 9.5 out of 10 is pretty much, so you should be asking the question, can I afford not to use such an easy application? And for the insurer, really understanding the risk, eliminating all this manual travel and inspection costs and all the processes. So there's benefits for everybody. So I've talked about our solution. What is it that Bdeo is? We come originally from a video solution. So BDEO and video sounds the same in Spanish. We've since developed into the visual intelligence space. We've won lots of awards, cool InsurTech awards. Got a lot of well-known customers across in our traditional markets of Spain and Latin America. And we got some great venture capitalists who are really funding our journey. So what's it all about? Bdeo, visual intelligence and BDOs, driving digital speed and saving money. And if you'd like, please come and book a test drive and we'll show you the system. So that's all from me. Good evening, everybody else.
Hello, everybody. My name's Andy Thomas, and I'm the Chief Exec of Kind. I wanted to talk to you very quickly this afternoon about Kind and how we enable faster and less complex cyber underwriting. Kind, as a business, we started it in 2018. We're based in London. And really what was driving everything that we were doing is that our experience in the market was there was a lot of people looking at cyber risk, trying to insure it, trying to understand what their own risk profile was without having access to any tools that would actually enable them to be able to visualize and understand the risk profile they're presenting to the world, and do that in a very simple and easy to understand manner. So we started creating a tool set that essentially allowed anybody to get anybody from any experience or any background to get a view of the cyber risk profile of any organization. And to do that with a simple set of information. So Kind enables the risk profile of pretty much any business anywhere in the world to be revealed based upon just giving it some very basic information. And that information primarily is just one of the internet domains that's owned by the company. One of the things that we learned very quickly was if you ask any business any complex questions about themselves online, you'll either get the answer that says, we don't know, or you'll get the wrong answer. So we created a suite of products, and they are designed to essentially simplify the process of visualizing cyber risk for any organization, any stakeholders got an interest in it. And over the last couple of years, we've begun to understand very clearly how this sits within particularly the cyber insurance value chain. So we now have a suite of products that are sat on a consistent platform that enable organizations themselves to be able to manage their own cyber risk profile in a way that that's an outside-in view of their business that allows the CISO and the information security manager to keep a grip on the view and the profile and the risk of their organization and what they're presenting to the world. And we've got products that help brokers actually help clients understand their risk profile before they're presented to underwriters for insurance. We've got a product called Signals that allows underwriters then to very quickly assess the risk profile of the company that they're being presented with. So what I'm going to do is to walk you through this because it's like a demo. So I'll show you this for live, and I'll show you a little bit about how Kind works to bring it to life for you. So forgive me a second. I'm just going to stop sharing while I share one other thing. So stop sharing there. It goes without the aid of a safety net, and we'll go for right. Okay. So what I'm showing you now is is Kind On, running on an organization. That organization is, we can't create an entirely fake organization. So our demo is always on St. Mirren FC because it's our product manager is a St. Mirren supporter. And so essentially what this will allow you to do is I'll show you how Kind discovers the risk profile of an organization. So what we've given Kind here is just one of the internet domains owned by St. Mirren. And based upon that, we're able to derive this risk profile of St. Mirren and the way it's presented to the world. Now, what this means, though, is this is very, very useful to the CIO or the InfoSec team at St. Mirren because it allows them to stay on top of the risks that they're presenting to the world. And Kind On is updated at least every 30 days. It's a sort of active, engaging, continuous risk analysis that's usable by the business. But we also very quickly understood that this risk profile, although it's beautiful to look at and interesting to look at, it's absolutely no use if you're trying to underwrite this business because there's just too much information. So what we created on top of the same platform as this works is something that we call Kind Signals. And Signals is being used by several very large underwriters. Indeed, we're underwriting we're helping our underwriter partners underwrite thousands of organizations a day across pretty much every market in the world, across every size of organization. And what Signals does is it essentially distills the analysis that we've found within Kind into a set of indicators that the underwriter cares about. So essentially we will sit down with our underwriter partners and say, okay, which risk profile within an organization do you actually care about? What fits your underwriter guidance, your underwriter guidelines? Which are red indicators and which, for example, are amber indicators of risk. So if any of these exist in the infrastructure of the business that we're looking at, we rank them red or amber. So here you can see what we've done is we've taken, I've had to honestly redact this, I'm awfully sorry, but I can't really share the risk profile of real organizations with you at this level of detail. But you can imagine there's 3 organizations here being considered for cyber underwriting. And against a set of indicators that are red indicators and amber indicators, and in this case they're actually ransomware risk indicators. There's 4 indicators that, if present, would rank it as red, 4 that would rank it as amber. So as you can see, there are 3 organizations here with a variety of different results. So one organization is a green, they're fine. Another organization is a red because there's occurrences of red indicators within their infrastructure. And they're absolute quantitative indicators of issues that may arise. Now, we support our underwriter partners as well with access to the full data associated with those results. As you can see here, that can be shared with the organization so that the organization itself can comment on the result or detail any remediation actions that may be impossible, any mitigation that's in place. recognizing that we identify results that the client may possibly be fully aware of, and there's mitigation in place to prevent that. The second element within signals is that we give a qualitative factor as well, associated with the technical sophistication being displayed by the organisation. So it's sort of like not just a quantitative factor, it's a qualitative measure on the organisation. We've got a team here in London who are supporting our underwriter partners in this process. We can run signals on any organisation of any size pretty much within minutes in the world. This is all about driving simplification into a cyber underwriting process that possibly is getting overly complicated because of the state of the market. The market is hardening. People want more active underwriting, more stronger underwriting principles. Signals is designed to support that, but to do it in such a way that makes it possible to underwrite any organisation very quickly with accurate data and transparency. So I would like to thank you for your time. I will pull up the final slide that gives my contact details. And if you have any questions on the back of what you've seen today, then please do drop me an email. I'll be very happy to talk to you. Thank you.
Good afternoon. Thank you everybody for joining us, and thank you for hanging around, conscious that the football is coming fast, and so there might be a few people that are looking to get off, but hang around for the questions please, because that'd be really appreciated. So as we sort of discussed before, we were various risk solutions, and we're rebranding to Underwrite. And the reason I tell this story is because various was a name that we came up with. It's Latin for more accurately. We wanted to help insurers more accurately predict risk. Unfortunately, Verisk entered the UK markets shortly afterwards, and everyone gets us confused. So as of last week, it's Underwrite. Write the right policies for the right people. It's a mouthful that I'm not going to repeat too often. But a little bit about what we do. So I believe personally that insurance is at its heart a social device. The many pay for the few. We all pay our insurance premiums so that if we or one of our neighbours involved in an accident of some description, they're not bankrupt by it. It doesn't cause them a financial hardship because the insurance companies pick up the tab. And that is something that I think the public have always considered very fair. They pay their premiums and they get that security that comes with that. However, here in the UK, at least in our motor insurance market and possibly wider, we face something that I'm going to call the trust pandemic right now. We've got a breakdown in trust between our policyholders and the insurance companies, and that's a two-way thing. We don't trust our policyholders anymore and they don't trust us. If we focus on why that was, we've got some few things going on right now. We've got the COVID pandemic and we've got business interruption claims. We've got the FCA reporting and regulating insurance companies due to the dual pricing issues. And these are causing us problems. Furthermore, we've got the reverse. I mean, we've got fraud going on everywhere. And we're reporting that fraud adds £50 to every household insurance bill in the UK, and that's a problem. That creates this reciprocal, this cycle of mistrust. That the more we mistrust our policyholders, the more they mistrust us, and the more we increase prices to compensate for that, the more they mistrust us, and we end up with this problem that the many are now paying more than they should to cover for the few, and that's not really fair. And what that causes is this situation where insurance companies are seen as fair game. They don't pay out on our claims. They charge us too much. And then also this issue that, well, if he's doing it, so should I. And a survey done by LexisNexis said 43% of UK policyholders believe it's acceptable to make omissions or adjustments to obtain a cheaper premium. I think the most worrying number that comes out of that 43% is that 14% believe it's acceptable to omit previous claims information from a car quote. in order to obtain a lower premium. And that's something that I think was quite a large number, certainly more than I expected. That's all amplified by the fact that then policyholders go on to have fraudulent claims, and there was 107,000 fraudulent insurance claims detected in 2019 with a value of 1.2 billion. A new scam uncovered every 5 minutes. That's extremely worrying numbers, but also it continues to amplify this mistrust. But if we can start to correct that, if we can start to change the course of that, and the few pay a little bit more, the many pay a little bit less, we can start to increase consumer confidence, and that will start to slow and reverse that cycle. As customers have more confidence that we are doing a better job of detecting fraud, they'll start to be more honest. As we get more honest customers, we can start to reduce their premiums. And as we start to reduce their premiums, and we can improve loss ratios because less consumers see insurers as fair game at point of claim. So how do we do that? Well, the Insurance Fraud Task Force said that data sharing is vital in the fight against fraud. And they went on to say that data sharing would make fraud easier to detect at every stage, from application all the way through to claim. And that's where we come in. We help you join the dots between the point of application and the point of claim. And also we have a data sharing platform. And that's really where our strength is. The UK motor insurance market, our data sharing platform is where we really can add value. Our data sharing platform is genuinely collaborative. We deal with all shapes and sizes of insurers, of the claims management organisations, everyone through the supply chains. And what that means is that we have a really rich data pot. We offer this service free of charge at the point of claim for anybody that contributes their data to the platform. The reason we can do that is because we make this data available then at the point of quote, so that insurance companies can detect fraud earlier in the journey. Prevention is better than cure, and by detecting fraud earlier in the journey, the best customers can get the best prices, and the bad customers either have an increase or, better still, will not be able to get a policy at all. It's genuine collaboration to combat fraud. Furthermore, the power of our platform allows us to join data from any data type. We can take insurance policies of any description. We can create a motor policy. We can create a gap insurance policy. We can create a household insurance policy. We can create a contents policy for someone who's rents a property. No problems at all. And then we can allow the insurers to join the dots between them policies. So, and from the point of quote all the way through to the point of claim. So an individual who has undisclosed claims, you want to know whether they go on to perform worse as a policyholder, we can do that. We can join the dots between quote and claim and everything in the middle. So our data, I said before, our real power is in our data. We've got about, I think we put in about 1 billion data points in total that are deduped down to 100 million unique data points in our database, made up about 6 million rows, 3 million claims, and 3.7 million people will estimate to be in the database at the moment. And all of the associated information that goes with them, the addresses, the phone numbers, the vehicles, the email addresses, the driving license numbers, etc., etc. And what those things allow us to do is that they allow us to join the dots between individuals. So Joe Bloggs moves from the High Street to 1 Acacia Avenue. We can join them even if they don't provide you with that previous address, because we can link them via their phone number, their email address, or any of them other pieces of information. What's more is that information can feed back into your own systems, into your other data enrichment platforms, and you can take that 1 Acacia Avenue and go and see if somebody else knows about any more claims, see if that individual's committed fraud at that address. You didn't have that address before, you do now. And that's extremely powerful. In practice, we find that our clients see about 4 to 5% uplift in 4 to 5% of policyholders have undisclosed claims, which is still short of that 14%, but as we start to add more data from other sources, we expect them numbers to increase. The thing that's really interesting though is that when we see them 4 to 5% of policyholders, they have a 50% higher claims frequency. That's not just the people who've had other claims, that's from people who are dishonest to people who are honest. They have a 50% higher claims frequency, 30% higher loss ratio, and anybody who who's been underwriting for long enough will know that those numbers can make a significant difference to the bottom line. And as I mentioned, the best part of this is that those gains are exponential. As an insurer adds their own claims data, matching is improved. As future results can be improved, and these things are multiplied every time another member joins our platform. So just to recap, data sharing can provide a real competitive advantage, and that's not necessarily a competitive advantage against your competitors, but a competitive advantage against the fraudster, because that's really where the fight is. It's between the insurance market as a whole and the fraudster, and nobody wants the fraudsters to win. We can help you identify the best policyholders, reduce loss ratios, and attract better policyholders with more competitive pricing. We enable data sharing across the platform and across the supply chain, and it only improves as more data is added. And that's it from me. If anybody wants to hear a little bit more, you can get me on any of the details that are on the bottom of this slide.
Thank you very much, everyone, for sharing your presentations and insights to what you have on offer here. And we are now going to move to the Q&A section of our session. Please, if you're in the audience and you would like to submit questions, do feel free to do so. We have received a couple already, and first I'd like to go to Roger Ferrandis of Wenalese, and the question is, what kind of open data source do you use?
Right, thank you. Very good question. So we basically divide the data sources into large groups. On one side, we consider global data sources, in which we include, for example, information coming from Google for Business, information coming from these platform reviews like TripAdvisor or restaurants, and also the websites of all the businesses. And then on the other side, we consider more national or regional data sources, in which we can find, for example, property registers for a specific city, or business registers that come from the government.
Thank you, Roger. And the next question I have is for Andy Thomas of Klein. And the question is, do you have any experience of the kind signals analysis helping underwriters reduce claims or incidents for helping the insured?
Yeah, that's an interesting question. It's very hard to prove something that didn't happen because of the analysis that you provided. But we do know of several incidents this year where the signals analysis has flagged specific red issues that have been passed to the client during underwriting, but the client themselves has not mitigated those issues immediately and has consequently suffered an incident. We do also know of, we're well aware of signals actually helping the client during the underwriting process improve their risk position. So the analysis that we provide being actually taken on board by the client, and the changes being made to mitigate those risks before they can actually cause an issue for the organisation.
Thanks very much. And the next question I have is for James. And the question is what you offer a UK motor-only solution, and how is the solution made available to insurers?
Yeah, so at the moment it is, we focus on UK motor because that's where our unique data's from. But as I alluded to in the presentation, we can apply that to any data type from anywhere. And we make that available pretty much however the insurer wants. We have a web portal that customers can log into and check out an individual. We make it available via an API, or we can batch screen data overnight or whatever. So yeah, we make it available to an insurer however they want it. Is the answer. However's easiest for them.
Okay, no, that's great. I don't think we have any more questions at this stage. So on that note, I want to thank all of our entrepreneurs for their insight, and please, anyone in the audience who would like to reach out to them, and if you see that there are ways that they can help your business, their contacts are available through the conference routes. And it's my pleasure now to hand back to Helen.
Thank you so much, Francesca, and thank you for your moderation of the event so far. We'll see Francesca again tomorrow. And a big thanks to our panelists, James, Roger, Paul and Andy. It's great to hear younger companies and startups contribute to this event. So thanks to our showcase sponsors, Wenwise, Bdeo, Kind and Underwrite. So that's a wrap for day 2 of the conference. I hope that you can join us tomorrow for the final day of Underwriting Innovation Europe. Tomorrow we'll be focusing on the evolving risk landscape. We'll be looking into distribution, intangible risks and cyber as well. We've got loads of sessions on cyber tomorrow. We'll kick off at 12 o'clock BST, and we've got some great speakers lined up. We've got Liberty Specialty Markets, Munich Re, Swiss Re, MS Amlin, Beazley, Aviva, Ergo, Tokyo Marine and loads more. So hopefully I'll see you all tomorrow, and best of luck for England and Germany in the football this evening. Thanks for joining us. See you soon.